Welcome back, and you're watching Dukascopy TV. I'm Darren McDermott. I have John Sandwick from Safa Investment in the studio to have a look at Islamic asset management. And John, welcome today. It's great to have you in the studio.
Thank you. It's my pleasure.
So there are 87 trillion of assets under management now worldwide. Now, how many of these are actually Islamic? And of course, you saw Islamic asset management as a huge opportunity. So tell us about this, and of course, the mechanics.
Now, assets that are professionally managed worldwide are predominantly managed by some of the biggest names in the business: UBS, Credit Suisse, JP Morgan, and the like. And we know that they have a very large number of clients who are Muslim, people who are from or within the Muslim world who care a great deal about Sharia. Mm-hmm. Sharia is an important part of their spiritual wholeness, if you will. And so these people who live a Muslim life in just about every other respect do not live a very Muslim life when it comes to their investments, because Islamic asset management has never gained traction in the traditional asset management jurisdictions of the world, like New York, London, or even here in Geneva. So what we've been working on for quite a few years is to, if you will, merge the science and technology of asset management with the needs of individual Muslim savers, wealth holders in particular, so that we can deliver a true, technically correct Islamic wealth and asset management service that's founded on the principles of modern portfolio theory. What that means is we follow the rules. From the very beginning of the asset management industry, we've always been constrained by the rules, and the rules are clear. As first developed in the 50s by Professor Markowitz of New York, Columbia University, and later by Professor Tobin at Yale University and Professor Sharp in Chicago. All of those men won Nobel Prizes for their constructing the foundation on which the entire asset management and wealth management industry exists. And today, yes, I would like to tell you a few words about how we construct Islamic asset management. I've shown you on the screen here an asset allocation. This would be for a typical customer who wants a balance between risk and reward. He doesn't want an overly risky portfolio, nor does he want a portfolio with no risk at all. This is what you would call a balanced strategy, and it's a very typical strategy within Swiss private banking and Swiss wealth management. And you'll find that clients of Swiss private banking, whether they're Brazilian or Australian or Chinese or Italian, you find most clients of Swiss private banking have this kind of strategy. And what we show is in this pie chart, on the left side are the riskier assets, and on the right side are the less risky assets. And the less risky assets are generally what we would consider guaranteed or near guaranteed. In the conventional private banking world, guaranteed means a deposit or a bond. And so on the right side of an Islamic portfolio would be Murabaha securities, which is Islamic style deposit security. And on the right side, of course, you also have what are called sukuk, often commonly called Islamic bonds. Now, Islamic bonds, like bonds, come in very many different types of quality: credit quality, geography, industrial classification. And if you look at the world of Islamic bonds, or sukuk as we call them, you'll find that there's a very large number, over 250 billion, of relatively high or very high quality sukuk in terms of credit quality. Varying maturities, and of course there's floating rate and fixed rate. And so you can pick and choose amongst Islamic bonds or sukuk to create a portfolio of for a client on the right side that has very, very high credit quality and would meet the standards of credit quality that you would find for required of clients of, say, Credit Suisse or JP Morgan or UBS. On the left side are the more risky assets. On the left side, we construct a portfolio of stocks, primarily stocks, and we choose the entire world of stocks. The stock universe of the Dow Jones World Index consists of about 4,500 stocks that have a market capitalization that comprises about 90%, 80 to 90% of the whole world's stock market capitalization. So those 4,500 stocks on the Dow Jones World Index comprises pretty much all of the stocks in the world. From that, you can extract the Dow Jones Islamic Market World Index, which comprises about 2,700 stocks, about half of the conventional index, and only about 18 or 20 trillion dollars of market capitalization, which is again a little bit more than half. But you'll find still a very rich, an enormous database of Sharia-compliant equities existing in markets around the world. And so from that database of high-quality stocks from the Dow Jones Islamic Market Index, you can construct the left side of the pie chart, of the asset allocation. And of course, you can throw in a little bit of also what we call alternative investments.
Of course.
Muslims cannot buy bonds and cannot buy deposits, as you know, but Muslims can also not own hedge funds. And many of these other very strange and exotic securities we see that have crept into asset allocation worldwide, especially here in Swiss private banking. So no hedge funds are allowed. What we've done is we've found commodity funds, we've found some special real estate funds, we've found some special strategy funds. So if you go back to that original pie chart, you'll see that the entire spectrum of investments is carefully engineered with high quality securities. And what's amazing is after you've done your asset allocation and you look at the historic performance of the collection of securities you put together, you get a very interesting 6-year performance history.
So John, looking at the performance of the portfolio performance, can you tell me exactly what this chart is all about?
Well, thank you. Yes, of course. We have constructed portfolios that meet international best practice standards, which are very, very strict. Regulatory authorities everywhere require investment managers like us to practice what we call the prudent man rule. And there are prudent man laws everywhere. They're here in Switzerland, they're in America, they're everywhere throughout Europe and the world. Prudent man law says that you have to construct a portfolio with securities that will meet standards for safety and appropriateness for your customer. So what we've done is we've engineered portfolios of best of class Sharia compliant investment products, and then after constructing these portfolios in low, medium, and high risk asset allocations, we did some back testing, and the performance that we've discovered is just absolutely extraordinary. We've taken our data back to the beginning of 2008. And of course, as you can see from the performance charts, came the great crash of September 2008 with the collapse and bankruptcy of Lehman Brothers. And of course, after September 2008 came the long period of recovery. And Sharia-compliant portfolios, while they match and mirror the upswings and downswings of conventional portfolios, what we've noticed is their downs were a lot less steep, a lot less deep, and their ups were a lot quicker to recover. So over a multi-year period, in fact, a period of time that shows some of the most extravagant swings in the history of global capital markets, certainly the biggest crash we've experienced since 1929 was embedded in the 2008 stock market collapse worldwide. Islamic portfolios came out on top. Now, we have examined the like-for-like construction of global US dollar balanced portfolios, whether they be Islamic or not Islamic. And we matched our portfolios to those that are delivered by some of the best and biggest brand names in the global wealth management and asset management businesses. And we come to our final chart, what we call our risk-reward examination of Islamic portfolios. And this is probably the most important information I can convey today. When you apply examination of standard deviation of an Islamic Sharia-compliant portfolio, and of course you look at the historic profitability of that portfolio, of that method of investing, knowing that they are as much as possibly as you can get them an apples-to-apples comparison, look at the results. Here on this chart we're showing that a Sharia-compliant portfolio has substantially less risk and substantially more profit than almost anybody else in the asset management industry. Now, you don't have to be a Muslim to be convinced on the utility that you want higher profits with less risk. And here it is, the data, which you really can't manipulate or change. The data is the data. It delivers to you a very compelling and convincing case that Sharia-compliant investing gives you more profits with less risk.
John, thank you very much for explaining all this to us and having you in the studio. It's been a real pleasure. Thank you.
Thank you. It's my pleasure.
And thank you for watching Dukascopy TV. Now, do stay tuned. Do not go anywhere, as we have plenty more heading your way. Goodbye for now.